Warm greetings to you again, our viewer, and welcome to N-Wealth Conversation hosted here on N-Wealth Money TV. It's always great pleasure to have you on the show as we have great discussions around wealth creation that together as a community we believe is a journey towards a better tomorrow. It's always been great pleasure to bring to us good, talented and skilled minds to respond to various questions that we have. And the biggest question we are asking today: do we have opportunities to invest outside the country? Stay tuned as we walk into the discussion. For the purpose of responding to all our questions, I am a very lucky man today to come to us with great men seated in between us, Steve and Fred. It's always good and pleasure to have you on the show. And perhaps before we walk into the great question, just to give you an opportunity to introduce yourself, Steve.
Sure. Well, it's a great pleasure to be with you today, and thank you very much for this opportunity. My name is Steve Tennant. I'm a director and founder of Star Capital, a company that is now registered in Kenya, and we offer the opportunity to invest in an offshore investment structure. Over to you, Fred.
Thank you. My name is Fred Nzui, the General Manager at Star Capital Management Limited, a licensed and operational local asset manager, keen to bring innovation into the asset management space. We have products that cut across offshore investments, Sharia compliance funds, liability-driven investments, as well as alternative investments. We will be keenly engaging with you today as we seek to explore offshore investments. Thank you.
Thank you, Fred. So let me start with you. In his introduction, he mentioned that you do offshore investments. And perhaps for our viewer, maybe just to define, what is offshore investment?
An offshore investment is where you place your monies outside the country. So this can be strictly the East African region or into the global space that we are likely to explore more in this conversation this morning. So how do you do that? How do you place your offshore investments safely? And this is targeted at pension institutional clients for whom the solution speaks to the problems that face them today and challenge them in the current financial regime that we're in. Steve?
Yeah, I think that this is an issue that is found around the world. The reality is that investing just in one country limits the investment opportunities. So, for example, where we have a stock market with, let's say, 20 different shares to invest in, around the world, there are thousands and thousands of different shares to invest in. So, first of all, it gives you greater diversity to invest in.
So Fred, again, back to you. Steve mentioned opportunities outside the country, and your name is Bunyoki. Of course, hey, I'm from Kenya. Why should I run away with my money to the outside country? Have we run short of opportunities in the country?
Well, why you look at the global stage, given that as a trustee of a pension fund, you have the fiduciary responsibility to ensure that you don't jeopardize member benefits, but also you add value to the return and the members. In the current space, Kenya lacks the breadth and depth of some of what you can get out in the global market. Take an example of Apple. Yes, they've launched the first iPhone 16 years ago. Apple just reached the 3 trillion valuation mark. If we look in Kenya over that same period, we launched an IPO, the Kenya Re IPO, coming in at 9 shillings and I think 80 cents at the time. The current value of that equity is around 1 shilling and 50 cents. So that tells you that the markets out there globally have been growing, and that is the opportunity that you're presenting to trustees and pension funds. There's no Kenya Tesla, for example, that you can talk to. So it's good for pension trustees to ensure that they allow their members to benefit from the gains in terms of benefit to their members by giving them that exposure to the global market.
Maybe Steve, I know you've walked in the terrain both in Kenya and outside Kenya. But what Fred is just pointing us to, the global benefits that come with the depth of investment. I don't know, what's your view? You've been in and out of the country. Well, what's your view?
So when you talk about investments, you've got to look at many different factors. Return on investment is just one of those factors. The other is how much risk do you take on to get that return. So risk is also an important factor of investing. And there's a saying that the only free lunch that you get in investing money is by diversifying your investments. So, for example, many countries around the world go through different stages of problems, whether they're in a bit of a recession, whether there's rioting, which is pulling their markets down. France is a great example of that right now, in fact. So if you're invested in many different countries, the risk of those investments being affected by a particular riot or a particular in-country problem is equal to 1 over the number of countries that you invested in. So that is one way that you can reduce risk, is by investing in investments in many different countries.
So diversification, Fred. Diversification is, investing in different countries is part of it.
Yes. Ideally, when you look at modern portfolio construct theory, speaks to diversification, the risk return aspect of that portfolio will speak to how well diversified the portfolio is. If you look at the problems that are facing trustees today, you have the twin challenges of inflation. Yeah. So during an inflation environment, what would the trustees need to do? They need to allocate their portfolios to real assets, right? Because they'll only add value if the return on the portfolio is able to match the inflation rate. And you can see the consumer prices are now the talk of town. Yeah. Unga, 10 years ago, 1 kg was retailing at 50 Kenya shillings. A 2 kg was at 100 Kenya shillings. Currently, your 2 kg packet of unga is at 250 Kenya shillings. So if the trustees are not able to ensure that the investment decisions they take are able to chase inflationary rate, that the members will be worse off in retirement. So you're looking at old age poverty. So that diversification is very key to not only diversify away from the Kenyan economy a portion of their portfolio, but also as Star Capital and the fund that we are bringing to the market is diversified internationally. So like as Steve highlighted, the market backdrops in different regions, different sectors help to mitigate the risk in the portfolio. And this are able now to drive return aspects for the members' accounts as well.
And discuss. Good. So I like you mentioning different sectors, different countries, different asset classes. I'll be coming to the question asset classes. But Steve, you mentioned, and he's also reiterated the issue of risk and returns and maximizing the returns. Maybe explain to me, how do I generate returns out of an offshore investment?
Good question. So I think partly what we're trying to do at Star is to find those countries and those different market sectors that will end up giving a better return to Kenyan pension funds than would normally be the case. So it's not just a matter of, here is a bunch of investments put out around the world. We specialize with our team that's allocated the money to those investments. Our teams are based both in Mauritius and in the United Kingdom, and they look at the world markets and they see what's happening. So, for example, in countries where the interest rate is increasing dramatically, one would expect that the consumer, the man in the street, would have less money in his pocket, so he can't spend. And the reason he's got less money in his pocket is because he's paying more interest on the money that he's borrowed for things. So if he's got less money in his pocket, one would expect in that particular region retail sales to fall, and therefore those companies exposed to retail would also have lower profits or no profits. So our speciality is to make sure that we look at countries and we look at what's happening in those countries to find opportunities.
Good. So Fred, as you're finding the opportunities, I have given you my 1 million or 2 billion, depending on my size, the size of my stomach. How do you get me money back with something?
Just to look at that, your money is in shilling.
Yes.
And we are very well conversant with how the shilling is depreciating. I think at Star, we are now saying 140 and beyond. Currently, as of today, the shilling is at 141 to the dollar. So you need to give that exposure to the dollar because the shilling is depreciating. Yeah. So one key aspect of the product that we have is targeted at institutional clients. So it's long-term, it's medium risk, so it gives you trustees peace of mind, knowing very well that this product has been designed for pension funds. Yeah, so we're not in the business of doing long shorting or hedging as a kind of aspect. So it speaks to that pension institutional client. And it's also it's a collected pooled investment. So it means there are no minimum ticket sizes. So we allow that small pension fund as well as that big pension fund to have access to that fund, which then invests internationally. So various aspects are taken into account when designing the pension fund. One is the liquidity concerns that the trustees have, because they need to pay member pensions as and when they are due. So the fund is liquid because it invests in exchange-traded funds that are listed in various global exchanges. The exchange-traded funds allow liquidity. And where we are coming in as Star is the active approach to select those ETFs. So an ETF, like indicated in sector, can be IT, can be commodities. But how we go into that market to select equities, ETFs in the equities, in the bond markets, in the commodities, is what the investment team that Steve highlighted, who have an expertise. And not only that, they use very sophisticated analytical tools to be able to drive that. And at the same time, our key deliverable is the client service. So you, as an investor, you will be able to have access to the daily pricing of the units in the collective investment scheme, which is in dollars. So you can just come in on a daily and just have access to that dashboard and see how your investments are faring. So that kind of gives you a level of comfort that you don't have to wait until the quarter end cycle for us to report to you as well. So the trustees, with the kind of client service and expertise you're bringing to bring that global product into this local market, is going to really give them a lot of advantage for their members.
So just to follow on that, Fred, so you mentioned that these funds are in exchange-traded funds, and what will happen is that the underlying investments will either, if it's an equity, a share in a company, they would get a profit share or a dividend into that unit trust, and therefore the price of that unit trust would grow. It's the same with government bonds. If government bonds are sold, we can sell them either at a profit or keep them and just get the interest. the unit price of the ETF will grow. So people in Kenya who belong to an investment with us will be able to see on a daily, you mentioned the daily pricing, people can come into our portal, or you can get an app on your smartphone to see what that price is, and you'll see it growing all the time. And those units can be sold by the pension fund trustees at any time. So the money and the growth comes back to you in Kenya.
And that's so it would give you the 2 billion you're investing, the price of the specific asset is appreciating, is interest or dividends that come in, and then the exchange rate advantage that you get as a consumer. Now, he used the word sophisticated analytics. So in this sophisticated analysis that do you have a bias toward asset classes that you choose to invest in the offshore spaces?
Actually, though, one of the most important things that we try and not have as an investment manager is any bias, because as soon as you have a bias towards something, you'll tend to invest in that something, even if the statistics and the information show that maybe you shouldn't be investing there. So we try not to have a bias, and we allow the mathematics to tell us where we should be placing money.
Good. Yes, I like that there's no bias, and you're always going for opportunities that can generate income. For the time that you have been doing the offshore investment, what are the asset classes that are raising as we speak?
Well, look at the current quantitative tightening regime. With rising interest rates, rising inflation, likelihood of a global recession as well, speaks to the current portfolio construct has a bit of a skew towards equities. But that is just driven mostly by the current investment regime we are in. The current benchmark is a 60-40 benchmark, 60% focused on bonds, 40% focused on equity. So this will then realign back. Remember that trustees delegate the tactical asset allocation, which is the day-to-day investment decision making to the fund manager, who then is able to play with that specific asset class, that in terms of the performance and then the performance of the underlying assets. So that now gives us leeway. So currently, the fund is more on a bias to equity, but that is more informed by the current quantitative regime that we're in, and where we're also able to offer to the market is that we are coming in as a specialist fund manager. So what we're indicating to the trustees is that, given that the trustees come up with an investment policy strategy that is able to give emphasis to how they would like to invest the portfolio, and in that investment strategy, they then outline the strategic allocation to the different asset classes in the portfolio. For example, in the local market, we've seen your typical portfolio has a bias towards bonds. So local fixed income is around 70% of any local pension fund, closely followed by equities at maybe around 20%. And you're able now to get your cash and near cash deposits. So with the current challenges that are facing trustees, it is important that they start deconstructing that portfolio. They start reallocating. One key area is around the fixed income. That has now to be reallocated. Then you start looking at selling the fixed income. Because of the long duration of the bonds, they're very sensitive to the interest rates that we're seeing currently in the market. So most tend to now move to the shorter duration bonds. Now that is a mismatch, mostly to the liability-driven investment strategies that is at the heart of most investment policy statements that trustees are using to guide their investment strategy. So some of these challenges need trustees to unlock the status quo and be able now to own the strategic asset allocations and allocate to fund managers who are best in class in those specific asset classes. Because your typical balanced mandate asset manager might not give you that exposure, especially to offshore, which is currently at around 1% of an industry of 1.5 trillion Kenya shillings. Yet the regulator has allowed pension funds to go up to 15% in terms of allocation. So that tells you that the expertise is lacking. The motivation or the trustee understanding of that specific asset class that we're discussing today is also minimal as well. So we're very keen to engage with trustees, expose them to the advantages of offshore, and hopefully build on that asset class to the limits as provided by the regulator. And beyond that, we will then press on to ensure that they do more than that. I think Steve will speak to a bit more of his experience in offshore, the South African market.
So absolutely, Fred. It's impossible for one person or one company to know exactly the way to invest in bonds, in government bonds, in equity, in property, in various offshore markets. You find that you need specialists. This has become a big trend around the world. In South Africa now, the vast majority of pension funds have asset managers dedicated to invest in, for example, just the bond market. Then you get others that look at large capital equities in South Africa. And then you get specialist offshore managers who have teams that are strategically placed around the world to find the best opportunities offshore. Those different disciplines are almost never available in one manager.
So they need to then bring in more people. Before I come to you on the question of customization in terms of the portfolio constructing, let's vision the choices of assets in the spaces we are investing in. You've talked about the equities and the bonds and the ETFs and all that. Do you have specific sectors that you concentrate that you think the global markets are doing better?
Yeah, so again, our teams in both Mauritius and in London are looking at different sectors of the market. For example, as Fred mentioned, around the world, there is relatively high inflation that's coming off, but it's coming off because governments around the world have increased interest rates to the consumer. Now we think, for example, that America, their interest rate cycle is reaching the top, whereas in Europe, they've still got a way to go because their inflation is not as under control as America. So we would expect that it's at this point in time, when the interest rates are likely to come down sooner in America, it's probably better to have more money in America than it would be to Europe, although we do have Europe and we do have Asia. But just those slight changes to make sure that we are placed to give the client and the pension funds a better return.
In America, specific, going to IT, going into manufacturing, where you at?
If you look at the US currently, there's definitely appetite for US govies, giving a good return. For the equities, you look at the equity risk premium that's coming out of the equity is quite good currently. So in terms of the customization of the equity of the portfolio, as highlighted through your mention of the analytical tools that go into selecting the ETFs. So in your equity portfolio, you will have your growth ETFs. That under those growth ETFs, they will list various companies in there. And so they will be able to look at that. Into the bonds, you'll have investment grade, high yield investment grade as well. Yeah, you'll have your corporate investment grade ETFs that speak to that. So these ETFs have multiple companies within them. So the selection of the ETFs is passive, but the active approach in terms of the selection of the sector, the selection of the regions, as indicated, the US, in Europe, in Asia, in the Pacific, is now the expertise that you're coming in to provide to drive what we call alpha. Yeah. So your typical will match, because this ETFs match the index of the market. Yeah. If you get the Vanguard bond, will basically mirror the bond market in the US, for example. However, how we are able now to provide that alpha is around the active approach to selection of the ETFs across various global exchanges. So that now drives that return. Yes. So that is what you want to bring into this market, that we are not only diversifying trustees, pension members' monies globally, but we're also diversifying it on the global stage.
I think what we should just say for some of the viewers is that Fred is not talking about driving the Alfa Romeo car. But alpha is the word used in the industry for the extra investment return over what one would expect from just investing in everything. And we believe that we can provide that alpha or that extra return to the clients.
And thank you very much, our viewers. We really appreciate that you have stayed to learn all through. And as well, we've always been advising you to take notes, to always be careful, to get to pick the lessons from the conversation. Remember to chat us on the comment section. Remember to like the video. Remember to share it outside there. Should you have any questions, we have our contacts highlighted down here. Please feel free to reach out, and we can always connect you with Steve and Fred for any other clarification needed. Until we see you in the next show, God bless you and go offshore.